This is your stock market investing tips for beginners. We're going to cover investing tips for beginners and how you can become a better investor and make more money. We're going to jump right into these investing tips. There's going to be 10 of them. I'm not going to cut or edit this. Investing tips. Here we go. Number 1, buy stocks that you understand. Again, this video is crafted for beginners. So I'm saying buy stocks that you understand. For example, let's just say that you like Tesla. You like their vehicles and you think that their cars are great and you think they're going to have a great future. You know, that's a starting point. Same thing with Apple. Back in the days when the iPhone came out and you thought that that was revolutionary and that's going to change the cellular phone market. You know, oh, this is so much better than the BlackBerry or whatever else is out there on the market. You can understand that. You understand what their product is. You understand what the company sells. It's very straightforward, relatively speaking. This is compared to like a Bear Stearns. If you're trying to analyze the balance sheet of a Bear Stearns back in the financial crash with C.D. Odell, like, come on, like that's going to be so much more difficult. Therefore, I'm saying for beginners, if you can easily identify, you know, what the company is, what the company sells, you're going to be better off. You're going to be making better investment decisions. For example, Chipotle, the business is straightforward. Like, it doesn't take a rocket scientist to understand the business. Again, this is compared to very technical companies that you should not be touching those stocks that you completely don't understand, you don't even know how to analyze. Let's go on to investing tips. Moving on to number 2. Let me cross that one off. You need to understand how the stock is doing relative to the market. It's all relative. If the stock is up 10% for the year, you can't say, oh, the stock's doing great. Or I'll give you an example. If that particular stock is up 10%, but the general market is up 20%, then your stock is actually not performing well. You need to take into consideration how that particular stock's performance is doing to the relative market. It's the same thing on the flip side. If the stock is down 5% for the year, you can't say, oh, that was a bad investment decision, that was a bad investment choice. Because if the market is down 20% and your stock is down 5%, that stock pick is actually doing great. You did a phenomenal job. Therefore, you need to take into consideration how that particular stock, that specific stock, is doing compared to the industry, how it's doing compared to the general market. So please keep that in mind. Investing tips. Here's number 3. Buy in over time. You want to take a staggered approach. Let's say, for example, that you have $5,000. I would not recommend taking that $5,000 and just investing all that, all at once. Just take in like a piecemeal approach. Invest that money over time. Or, here's another example. Take a portion of your paycheck, whatever the percentage that may be, and just keep buying into the market. Whether you think the market's overvalued or undervalued, just continuously keep putting in a piece of your paycheck every month into the stock market. Just taking a staggered approach. Don't just go all in at one point in time. It's just a safer approach because you might get all your money in. You might get lucky. You might get all your money in at the very bottom. Or if you're unlucky, you might get all your money in when the stock market's like at an all-time high. So therefore, it's a safer and more conservative approach to get your money into the market over time, just piecemeal, rather than all at once. Investing tips. Here's number 4. Avoid penny stocks. Especially if you're a beginner, my definition of penny stocks is if you're going to go to the OTC market or the pink sheet market, the PKs, just don't even try it. I mean, they're not even regulated. You're just asking for a disaster. I'm talking about the stocks that are not on the NYSE, the New York Stock Exchange, or the NASDAQ. No, okay, even the Amexes, that's one thing. But if you're talking pink sheets or OTCs, BBs, it just don't do it. You have to be such a seasoned pro, very experienced, to actually find like a hidden gem in the PK market. But even then, it's super dangerous and risky. Therefore, you got to really know what you're doing, have a lot of experience. If you're new to this, don't go to the pink sheet market, OTC markets, please. Don't invest in penny stocks. Investing tips. Number 5, remember about taxes. People have this misconception that if you have a gain and you leave the money in the brokerage accounts, then you're not going to pay taxes on it. If you sell your position, if you sell your stock for a gain and you still have the money in the brokerage account, it's still taxable. It's going to show up on your 1099-B. Therefore, you have to take into consideration that you're going to have to pay taxes. You most likely will pay taxes on your gains. Just remember that. So mentally, set some money aside or send in estimated tax payments. But just remember that there's going to be taxes on your capital gains. And regarding taxes, if you sell your position for a gain and you held it for less than a year, you're going to be paying higher tax rates. If you held your stock for a year or more and then you sold it, those are long-term capital gains. You're going to be paying much better tax rates. The tax rates will be much less than you would ordinarily pay on income that you make. Those are some things to take into consideration when it comes to taxes for your stocks. Investing tips. Number 6, you need to control your emotions. You need to be disciplined. Some people, they cannot control their emotions. They're going to be looking at their phone, their stock app, like literally like once an hour, or maybe even more. Don't be that person, because you don't want your emotions tied to it. You're going to be making errors. You're going to be making bad judgment if you have your emotions tied to investing. So keep emotions off the table, because that's generally going to lead you to lose money and make bad decisions. So especially if your stock's doing good, don't get super excited. And if your stock's going down, don't get super depressed, because it's going to affect your emotions and you can make bad decisions. If the stock's going down and you're getting scared, you might sell it at the worst point. Or if the stock keeps going up and up and up, you might be so happy, you might be so enthused, and you might think that it's going to go on forever, and you might not sell it. You might just be, have your head in the clouds and not just make rational decisions like, hey, this went up way too quickly, way too fast, time to sell. So keep your emotions off the table. Investing tips. Number 7. Let me cross this on number 6 off. Number 7. Investing tips number 7. Diversify. You should be diversifying so that you have a portfolio that's not going to be having some crazy swings. Because one company, if you invest so heavily in one company or put all your eggs in one basket, no matter how good or no matter how safe you think that is, that stock can get crushed, it can fall apart, who knows? It could be subject to litigation, whatever. You don't know. Therefore, if you spread out your investments, your money over multiple investments, multiple stocks, you're going to have a more balanced portfolio. Therefore, please diversify your portfolio. That way you have a more stable portfolio. Investing tips. Number 8. Have an emergency fund. This is kind of outside your stock portfolio. Here's the reason why I'm saying this. If you do not have an emergency fund, then guess what you're going to be dipping into? You're going to be dipping into your stocks. You're going to be liquidating your stocks because you have money issues, you have money needs. You're going to be selling your stocks. You don't want to do that. Therefore, make sure you have an emergency fund so the money that you do have in stocks is dedicated for a long-term play. Because if you don't have an emergency fund and you need money now, you might be in a good stock that needs time to pan out, to have, to achieve the price or the target that you want to achieve. But if you don't have an emergency fund, that plan comes to an end real quick because you need the money now. That's why you got to liquidate it, which you don't want to do, going against your original plan and getting out. Therefore, have an emergency fund. Therefore, you can have money in the stock market that's dedicated to long-term plays. So you won't be having liquidity problems personally. Investing tips number 9, have a game plan on when you want to sell. Therefore, in the example where your stock just keeps going up and up and up, you don't want to hold it, forever. If it just keeps going up, that's the thing. It's going to come down sooner or later. I'm not even talking short term, I'm talking long term as well. Have an exit strategy. Plan things out. Therefore, if it hits your targets or your target range, then you know that it's time to get out. So have a plan. Pre-planning. Investing tips. Going to our last one, not investing at all. A lot of people might think that the stock market is overvalued. Therefore, I'm just going to wait on the sidelines. I'm going to be in cash. I'm going to wait and wait and wait. If you were doing that 10 years ago, then you would have been on the sidelines for this whole time as the market ran up for the past 10 years. People said, oh, the stock market's getting too high. It's going up way too much. I'm going to wait for a big pullback, or I'm going to wait for the next recession. It didn't come for 10 years. Therefore, not investing at all could be a big mistake. Again, this is going back to what tip was that? That was tip number 3, buying over time. You want to take in a staggered approach. That way, it's a conservative approach. You're minimizing your chances that on both sides. You're minimizing that you're not buying at the top, you're not buying at the low. Therefore, it's a conservative approach. You at least that eliminates the possibility that you just totally miss a good wave, where you miss a bull market where the stock market's doing well. Therefore, just sitting on the sidelines, not investing at all, that's a huge mistake. I hope you enjoyed these investing tips. There will be more to come. And please subscribe and see what we are buying in our portfolio, and you can follow along. And you can use the affiliate links below to get you started. You'll get a bonus for signing up for a stock brokerage account. We get a bonus too, you get a bonus, and we all win. Thanks so much. See you next time.